We're live.
We are live.
We did it.
Welcome back.
We got the notification. We're live. We got the ding.
Welcome back to the Investor Shed podcast, everybody. We're so glad you're here. Thank you for coming. Thank you for listening. Thank you for being alive in 2026 because tensions are high out there. This is
what's happening. What kind of episode are we doing right now?
I don't know. There's riots everywhere.
Oh, they're all right. Yeah, there's a lot of stuff
in
going on
a lot
in the
of
world.
cities.
Yeah.
But I appreciate living in an area where there's just less of that chaos going on.
Yeah. I still feel for everyone involved.
For sure.
Like both sides of the equation. Like it's not easy.
People might not know what we're talking about because this episode comes out in March.
Yeah. They're gonna make that's way old.
Yeah. There's a lot of, ICE incidences with people getting shot in the face and stuff. And I feel like from what I've seen on social media, most people want to take a side.
Yeah.
One way or another, like I stand with this or I stand with her.
Yeah.
I'm like, can't you just think that maybe you don't have to take a side on this one and just think that it's like this is an incredibly tragic incident?
Yeah. Wow,
and both parties were probably pretty wrong.
Yeah, both.
Is that possible or no? Not these days.
I think it's possible, specifically coming from you and I. Like I know, like we can have our disagreements on, like, but we also come together amicably, right?
Sure.
I don't know, like it's a crazy world out there, and I think you just need to be trying to take care of yourselves and the people around you, and making good choices.
Yeah, try to make good choices. That's all we really have control over.
Yeah,
is the choices and how we react to things.
Yeah. I forgot all about that. My world feels so little right now, to be honest with you. Like
that's good.
Yeah, like
it's probably a good thing.
I try not to get into the news and politics, and it just feels heavy.
I really want to slow down with it this year.
Yeah.
And go back into my bubble because I felt like I did a really good job where I stayed out of the news from like 2013 to 2019 or something like that. There was like a good solid many years where I had zero clue what was going on in the news anymore because I just tuned it all out.
Yeah.
I almost didn't know who the president was probably at some point.
Oh wait, there's elections?
Obviously it was just Obama and then Trump and then more people.
And then some of the same people over again. Yeah.
But I felt like I was mentally in a better space, not having to worry about all the chaos in the world that we all have to deal with if we choose to.
Yeah. I think our own worlds are like complicated enough that we start bringing in these exterior factors and it gets really
you have zero control
You have zero control over, right?
And all you have control over is like your emotions to not be outraged or to try to see people's side. And it's just like, it's never a winning battle.
Right. We call that, I've talked about it before, my sphere of control, right? So I've got control over my actions and my reactions. That's really about it.
Yeah.
Anyway, take care of each other.
Let's talk about real estate.
Let's talk about real estate.
That's something that we can control a little bit.
Yeah, we can control what happens in our own real estate lives. Yeah.
So new data has come out.
Okay.
And it's data on what's gone on in 2025 as compared to the year before.
Sure. So it's end of the year 2025 data then, correct?
Yep.
Okay.
Yeah, and sometimes it lags a little bit. And I know this actual. So we're going live in mid-January here, and when this episode comes out on the podcast platforms and stuff,
April.
It'll be early March.
Yeah.
But here's what's gone on, which I find a little bit interesting.
Now this is market data specifically to Kootenai County. Is that what you've got going on?
This is
okay.
What I'm about to spit out is Kootenai County specific. So this is Coeur d'Alene, this is Hayden, this is Post Falls, huge market. Post Falls,
Spirit Lake, kind
Rathdrum.
of.
Yep, half of Spirit Lake. Yep. Half of the Spirit Lake is also in Bonner County.
Yeah, it goes
so this
to Bonner,
is
right?
like the city of Spirit Lake and
Sure.
and south of that. This also includes Hauser. Not a very big market, but
every time I think Hauser, I think Total Recall. By the way,
and this includes half of Athol as well.
People listening to our national audience are like, what the fuck is Athol?
Yeah, well, they don't have to listen to us, but maybe they like this stuff.
It's nice knowing like this local market is not obviously on a national level, but this does kind of give you a beacon of what is happening nationwide. Like it's not consistent, but you might find similar data points.
Yeah. Here's some interesting stats because depending on what kind of homes you're paying attention to, we have had home prices go up. We've had home prices come down.
Okay.
Depends on the submarket, the price point, and the area.
Okay.
In general, for the medium home price in Kootenai County, so medium would be like taking out the extremes of the uppers and lowers.
Got it.
And like an actual, like a better than average data. Like this is what the majority of the homes that are selling.
Yeah. Because there's median and then there's average price point, correct?
Yeah. Average is just, take
all the
everything and divide it by the number of actions, or the number of activities that happen.
Yeah.
This is you're taking out the extremes and then you're averaging out. So it's much more accurate.
What kind of extremes do they take out? Like, how do they factor out what is extreme?
I should know this. I don't. I'm going to have to look it up. I'll look it up later on the podcast and verify. So before the end of this podcast, I will be able to articulate that.
Oh.
But I can tell you it's a more accurate measure of averages.
Right. I love this. Now you're forcing people to stay because they want to know too. They're going to have to
see how I did that? You see how I did that?
Stick to the end of the episode for some juicy secrets. I love it.
All I can tell you is that a medium versus average is more accurate.
Sure. Okay.
So it's up as compared to 2024. So home prices in general for most houses went up in price by
Shocker.
about 4.3%.
That feels about average for, isn't it like about 6% a year is average what they typically go up?
Yes.
Yeah.
That's average.
Mm-hmm.
However, most people, but not very common in a high interest rate and where everybody feels like we're in a recession. So this is where this is defeating the odds a little bit. Historically in the U.S., housing costs typically rise about housing appreciation is around 4.3. It's actually pretty average. Yeah. But what's unique about it is that everybody feels like, wait, aren't we supposed to be slowing down?
Right.
Isn't inflation going down? Aren't prices supposed to be coming down? They never really do. Sometimes they do.
Yeah. You always hear about interest rates lately coming down, like interest rates have dropped. And I'm like, I don't really see a big difference.
So medium household prices have gone up about 4.5%. So the typical home that sells in this area is $549,000.
Isn't that nuts?
Little,
doesn't that just feel nuts?
$550,000.
Yeah, like if you want to buy a house that's like an average house, you pay $500,000
in Kootenai County. Coeur d'Alene, place where we were raised, which just doesn't seem real.
Yeah.
It definitely seems consistent from what I learned 10 years ago when it came to how homes appreciate. So I'm not surprised in that sense, where I was already educated about how these markets are generally going to move. And 10, 20 years from now, I'm not going to be surprised when we see averages of $900,000 for a house.
Oh yeah.
It will be shocking still to everybody.
Yeah, everyone's still
every year.
Like, what?
Everybody's always shocked by price. Nobody's like, pretty good deal.
Hey.
But we live in a reality where our purchasing power goes down every year.
Yeah.
Prices either they go up or the effort of those depreciating dollars have to go up to purchase things.
So you said your dollar gets you less as you go on too.
Yeah,
so
and that has to do with it. It's not just that the asset is this magical appreciating thing.
Right.
It's just stronger than the dollar.
Yeah. Well, the price. I mean, prices obviously go up, and then the dollars are worth less and less. Then you start seeing this divide more and more, I think.
Oh, show. So $550,000. Before we move on to other stats, to put that in context for the people that haven't bought a home yet, how much, if you're a young guy, which I think is a lot of our audience, and maybe you're just getting out of high school or something like that, how much money do you have to make on an annual basis for this to be a normal, comfortable payment for you? If you're getting a conventional loan where you're putting 20% down, you should be, with today's interest rates hovering around 6.2, you should be saving approximately, let's see, where is it at right here? $110,000.
About 1/5 the price.
Yep. Well, 20%, and figure you'll get a loan if you buy something on the medium home price in this area. You'll get a loan of about $440,000. Your monthly interest payments and principal payments, not including taxes and insurance, which have been going up as well. Insurance just goes up every year, and it disgusts me. But your monthly P&I is going to be about $2,690, and then your estimated total principal, interest, taxes, insurance. For those that have never bought a home before, you don't just pay your interest payment. You don't just pay your principal payment. You also pay your insurance payment because that never goes away.
Yep.
And your taxes. Usually when you buy something, most things you pay taxes on it, and then you're done. Taxes never go away. You pay those every year, and then your monthly amount is broken down monthly.
Yeah,
your bank kind of helps you figure that out, even though you pay the county twice a year or once a year.
Yeah.
So on average, you're going to pay about $3,000 a month. So a comfortable salary that you're going to need approximately $131,500.
Sure.
For going that strategy where you're putting 20% down.
And this is a conventional 20% down, like you said.
Yep.
So, okay.
Now, most people, they cannot save that much money.
It's hard to save $100,000. Like if you're not like being really intentional and like, or have a high paying job, $100,000 is hard for the average person, I think.
Yep. So the government has a solution for you. You just make more money, bring less to the table, and have a higher have a higher payment. That's called an FHA loan. So Federal Housing Association can step in and they can guarantee to the banks that, hey, they're going to bring in some skin in the game too with insurance.
Yeah.
So most banks will give somebody a loan on real estate with 20% down because they're putting that much skin in the game. If they ever had to be foreclosed on, it's unlikely that the asset will be worth much less than when they bought it.
Right.
Because it tends to appreciate about 4% a year.
Mm-hmm.
However, if you just stop making payments and they give you a loan for the whole amount, after taking the property back via foreclosure, which can take easily a year, even though in Idaho it could take as little as 4 months, it never really does.
Right.
It can take about a year with all the attorney fees that a bank would pay, getting the property back, cleaning it up, and then putting it on the market and paying real estate agents to sell it. They actually would lose. Hey, quick commercial break here. Thank you so much for listening to this podcast. I really do appreciate it. If you want to give back, let me help you buy a house, or I can help you sell a house. It's the only way I make money when I'm not investing in real estate. I don't make money on this podcast or the events I do, but I do make money only when I help people buy and sell houses. So if you're looking for your next investment and you're here in North Idaho, I want to help you personally. If you are not in North Idaho, I can still help you out. I have a vast network of referral partners all across the country, and I can find the right real estate investor savvy agent for you so you don't have to. It doesn't cost you a thing. Thank you for your support. Back to the show. On average, 60 to 100 grand worth of payments and that process of reselling a property. So that's why they need to have a loan to value of around 80% or less to feel confident in giving most people loans on real estate. That way they don't lose if that borrower defaults and they have to take the property back and resell it.
Right. I would say in most case scenarios, though, obviously, like if you have an FHA loan, people are paying their house mortgages right now. Yeah. Like
so FHA, and I'm going to get it. So that was just conventional.
Okay. Yeah.
Sorry. FHA is where the government steps in and they insure. That potential equity that the bank would have. So they're lending at a 96.3% ratio where the borrower only brings in 3.5% down. Yeah. But the HUD will take that property over if it defaults.
Okay,
if needed, or insure. Don't know exactly technically how it works. But to the bank, it's a very safe loan because the government's going to help out if they default.
Yeah, it's like got this insurance package behind it that if anything does happen, you said HUD is the one that takes care of it and takes over?
Yeah, so correct me if I get this wrong, lenders out there, because I know lenders speak to or listen to our podcast too. Yeah. But if I remember right, either it just becomes a HUD home. A HUD becomes the bank gets paid off. Or they insure that amount and the bank can take it back. I'm not really sure exactly which scenarios.
Brett Shoemaker's fuming behind his desk right now, by the way.
Well, he can correct us. But the point is that banks will do FHA loans all day long because they don't have the skin in the game also comes with the government.
Right. The skin in the game is an additional package that's backed basically, right?
Yeah, the government backs that loan. Yeah.
I was going to say, what happens actually when you default on an FHA loan? It goes back to HUD?
Yeah, so the bank originates the loan, insures it. A large portion of your payment, if you're getting an FHA loan, you're paying, like in this scenario, if you're buying a $550,000 home, you're going to pay $375 a month, and that's just under 1% of the loan amount to HUD, to FHA.
To FHA, yep.
And that's like this insurance premium that you're paying to this government entity that when things do default, that's when they have to step in and clean up the problems, so to speak. But it also means if you're going to go this option with less money down, you need to have a higher income.
Yep.
So in this scenario that we're talking about, you need to make at least $171,000 on average.
You're trading a higher income for a lower down payment. Like they get their money one way or another. They make sure that they get theirs.
And I'm saying in general, there's so many other factors at play here because you may have other debts.
Right.
You may have credit card debts, car debts and stuff, and that would change that amount. Maybe you need to make even more income.
Yeah.
But on average, people buying a home like this need to be making about that much money a month to have their debt to income ratio where the bank needs to feel comfortable making a loan, or they feel like you make enough income to make this payment and all your other living expenses.
Right.
Does that make sense?
Yeah, absolutely. Just to clarify one thing, you said they needed $171,000 a month. It's $171,000 annually.
Did I say monthly?
Yeah,
Sorry.
It's okay. In that example, just want to make sure we're not throwing people off with that. So
yeah, $171,000 annually would be your income if you're going the FHA route.
Right. Buying
a home with 3.5% down.
How do you see a lot of people?
Which actually is only $19,000-ish.
Sure.
Yeah.
With obviously you're a real estate agent. Do you see a lot of your houses going FHA right now, or a lot of them going conventional when you're selling as a seller, or as you have your own clients that are buying?
These days, I see a lot more conventional loans.
Yeah.
because conventional can also be a little bit competitive. You can see 15%, 10%, 5% down conventional loans. I feel like there's a lot more lending options. When I first started in real estate, I would say the first 5 years, I would say 80, it was a large amount, like 80% or more were FHA loans, USDA loans, VA loans, all these like government type loans for first-time home buyers. I dealt with a lot of first-time home buyers, but even they didn't have to be a first-time home buyer to get a VA loan or an FHA loan or a USDA loan. Since prices have gone up quite a bit over the last decade, though, getting those types of loans are harder. Yeah. Because you also have like some of those have income, like a USDA loan. Right. That's a rural loan, but there's an income limit in the household of like around $72,000 or so. It may have gone up since I last looked, but with the average price points in Post Falls and areas where you can get a USDA loan, you can't make a certain amount of income to qualify for those loans, but yet the prices aren't low enough to qualify for the home for you to only make that much income household, but still qualifies. I haven't seen a USDA loan in a long time.
They put you in a very weird bucket. Last time I remember hearing about USD loans is when you guys did one on your flip in Bonners Ferry. Okay. Didn't you guys get a USD loan on that?
Possibly. Yeah. Lower price point. Yeah. Up there.
But like that was the last time I've heard about somebody actually doing that. I mean, like you said, it's just kind of a few and far between thing that
it was quite popular. Yeah. When my first few years in real estate, even in Florida. Yeah. In Florida, Idaho, there's a lot of like USDA would lend in the majority of areas that had somewhat lower populations. Sure. Rural, they would consider it rural area. Post Falls is considered a rural area to the USDA.
I didn't know that. Crazy.
But not not Coeur d'Alene and Hayden. Right. So you couldn't get a USDA loan in Coeur d'Alene or Hayden for the longest time.
Gotcha. But you can in Post Falls.
Yeah, and then 10 years ago or so, they were gonna possibly take it off the list, but then they extended it for like another 10 years or something. Oh, gotcha. Okay. But now, just with the way, like I said, because they're priced so high, it's hard for anybody to qualify for them because they have income limits.
Right. Did they have the income limits like 6 or 7 years ago?
Oh, sure. Yeah. Okay. Yeah, they've always had income limits for the USDA. They're meant to help out people that are somewhat struggling or just, need a little bit of help from a better loan. Sure. Because USDA loan is 100% financing. Okay. You don't need to bring a down payment. Crazy. You need to bring your closing costs and stuff, but you can usually get a salary to cover that. Right. A veteran's loan, a VA loan, 100% option. Right. Again, FHA, 96.5%. So you don't need to bring as much down, but you can also, through a combo with Idaho Housing, that's a different government entity that Idaho has, where they can loan 3%. So you only have to come up with 0.5% down. Cool. And then you can ask the seller to cover your closing costs. So you can literally come in with less money down than if you were to get a rental. Sure. And you can still do that today. Crazy. You just got to make enough income
to show that you can actually
handle the next property.
And it's got to be for an FHA loan. That's not an investment property. That's one you have to actually live in, right? That's you intend to live in it for a year.
Yeah. You got to intend to live in it for 12 months. You definitely should move into it. That should be your intentions. Right. If not, you're potentially committing mortgage fraud. Right. So be careful out there. Yeah. Play safe. There's no policing efforts out there right now, but there always could be. Right. You never know. The administration's changing a lot of things.
Yeah. You say there's no policing out there, but like I don't know what's happening behind the scenes when people see these things. You know what I mean? Like, it could just be one phone call where you're like, I'm not living in there, and then
there's no post mortgage enforcement agency that any lender or any real estate agent is aware of. Right. But doesn't mean you can't still commit fraud and you can't get in trouble. Right. If somebody wants to take it to court and prove that you did something illegal. Right. There's still mortgage fraud. Sure. There's just not an active that we're aware of group out there trying to find it.
Right. It's such a vague guideline. You know what I mean? Like you have to have intent to live in this property for 12 months.
I think it's great.
Yeah, I love it. I think it's great. But like,
because it gives you, what if you fully intend to live somewhere and you're there for 6 months and then you find out your mother has cancer in another state. Yep. You got to move. Right. You got to move out of there. Maybe you don't want to sell it. You want to rent it out. It's your choice. You already got the mortgage.
It's your house.
You had intentions to live there for 12 months. Some life circumstance happened. Totally fine. Right. That's not mortgage fraud. Right. You're allowed to move out of your house if your intentions were to stay there. Right. And then something happens, you want to move. And and it could be as little as, hey, we just outgrew this house. Yeah. Or, hey, I found a better opportunity in this other city. I want to move now. I changed my mind. Your intentions when you get the loan have to be pure. Right.
But there's no way
That's Scout's honor.
Right, but there's no way for them to like put you on like a lie detector test and be like, do you swear you're going to live in this house for 12 months?
That's not realistic.
So help you God.
But you should intend to do the right thing, because there's still plenty of opportunity to create wealth with real estate. But yeah, it's a loose word. Do a lot of people abuse it? Sure.
Does everyone abuse it? No.
But don't put yourself in a position where it's absolutely clear that you're intending to abuse this rule.
We try to
occupying for 12 months.
Nick and I like to play in the ballpark of real estate and of what the real rules are that you can actually do. That we try to do this as much as we can. I think it means that we want to obviously take it seriously.
Yeah.
And like I think FHA loans are great. That's what my wife and I still have, and like I love it.
Yeah. And then if you don't have 170 grand a year, there are still other ways where with less income, you can potentially buy a $500,000 home. Maybe you look at a duplex, triplex, or fourplex, something residential, where it has rental income coming in from other units, and you can add that to your income without having it first. And an underwriter can, take, let's say you're going to go buy a fourplex for 800 grand.
Yeah.
By yourself, maybe you're only approved for $250,000 and there's no houses out there for you for $250,000. But maybe there is, but maybe it'd have to be like a super small little dinky 1-bedroom or 2-bedroom home.
Yeah.
But the more units you get, the more value you can get bang for your buck sometimes. Let's say you want to go after a fourplex, that's 800 grand. And maybe there's 3 units that are rented for $2 grand a piece. And then, now you're only, you can essentially add another 70% of the gross rents that are coming in towards your income.
Is that what they factor? 70% of the gross
Typically,
rents?
Yeah.
Cool.
Yeah. And every lender might be different, but I believe those are the basic underwriting guidelines.
Okay.
And of course, I don't have my calculator on me. I always complain about that.
I got one pulled up.
Okay. Take $6,000 in this fourplex example and multiply that by 0.7.
4,200.
Okay, now take that, multiply it by 12.
By 12, yep, because that's annually $50,000, $50,400.
Okay, so basically add that to your income.
So that 170 just became 120 basically.
Yeah, let's say you make 120 grand a year. Now you make $170,000 a year.
Awesome.
According to this. Maybe
like
there's other ways to manipulate.
Gross, by the way.
Yeah, gross.
Yeah.
Well, 70% too. And instead of just, let's, because they know there's going to be, fixes up to do. You might hire a property manager. You're not going to probably get that full 100% of the rents that are coming in to spend on whatever you want willy nilly. So they take, a healthy 30% of that and just act like it doesn't exist. Right. And, enough of that could just be vacancy too. Who knows what's going to happen with the rental, but you should never count on all the income. Right.
Don't count on it until it actually hits your bank account.
Sure.
I think that's the best way to do that. So yeah, that's super cool. And even just looking at this, obviously, like if you just got a fourplex, you rented 3 sides out at $2,000 a month, that adds $50,000 to your net worth annually.
Pretty much. Yeah. Yeah. Or it helps with that payment.
It helps with getting
like how much payment. Yep.
That's awesome.
Yeah. Yeah, and I'm sure lenders are pulling their hair out. Like, it's not that simple. There's other things to do.
Well, then probably.
Come tell us otherwise. But we're just giving you rough ideas. This is basically what they do.
Right.
There's more to it than that.
Sure.
But this is how you can get into a property without having all that income. You can create it just through deals.
Yeah.
Finding the right deal.
I love it.
Yeah. What else? What else is happening?
I know. I mean, we talked about the local market, and we kind of said it does kind of reflect what the national market looks like. Obviously you are going to find differences, like, Post Falls is completely different than Coeur d'Alene. These are just like Kootenai County in general. You know what I mean?
Here's some other stats that came out other than, because we just talked about the house price. Homes sold year to date from 2024, comparing 2024 to 2025. It went up by about 1.2%.
Yeah. And these are homes sold on the MLS, correct? Not on MLS. Not wholesalers or anything like that. Got it.
On the MLS in our region or in our Kootenai County area for single family homes. So activity went up.
Yeah.
Active listings, 668 current active residential listings as of early January.
Brett Shoemaker texted, "You can buy a HUD home foreclosed for $100 down." Thank you, Brett.
Thank you, Brett. Brett's listening. That's
yeah. I love. We still need to get him back on the podcast.
It's funny we were talking about Brett, and then he He heard us.
Yeah. I threw his name into the ether. He's one of the lenders I know that I know and trust and who listens to the show. But shout out to you, Brett. Thank you so much. Let's get you back on the show sometime so you can actually talk about this with us.
Yeah. We sound like idiots.
we're not qualified.
Okay. Days on market has actually gone down by 3%.
Okay.
So this doesn't surprise me too much because the 2024 year was an election year. And it was slower.
Sure.
Things stuck on the market a little bit longer. But right now, average days on market, about 93 days on market.
Sure.
So if you're flipping houses out there, or if you want to flip homes, you gotta make sure in your spreadsheet when you're analyzing deals, don't forget to account for about realistically how long is it going to take me to fix up this house?
Yeah.
And then how long is it going to take me to sell the house? Right now, average 93 days, almost 3 months.
Yeah.
That's a long time.
It is a long time.
That's
a lot of holding costs.
Yeah. A lot of flippers were so spoiled in the early 2020s.
You guys were.
Where average days on market, it felt like it was 30 minutes.
Yeah.
Even though it was really,
30,
1 to 2
45 days.
It was 1 to 2 months
Yeah,
because you still had to close on the home.
Once you get under contract, you gotta have your
and then it could fall
inspections.
apart and
Yeah.
come back and stuff. But like you gotta anticipate almost another month and a half.
I felt
of
like
just
your average
sitting
was
there,
like 30 or 40
sitting
days.
there
Yeah.
in anxiety.
Right.
But it does cost you money
Mhm.
every day on. So when you're analyzing deal, just at least figure 90 days in Kootenai County.
Yeah. Sometimes
the
it's
average
just a couple
flip.
$100 a day just to hold a house.
Oh, not just sometimes, almost all the time.
Every time. Yeah.
When you figure in taxes, utilities, and all that stuff, other than just interest, insurance, and all that stuff, easily a couple $100 a day just to own a house.
Just to have it sit there and not to do anything.
Yeah. So it costs money.
Yep.
It costs money to be on the market, and it's important to be aware of how long
Yeah.
it could take to resell something. Or just if you're just wanting to sell a house in general.
Yeah.
How long can you anticipate it sitting on the market if you're priced well? Because that doesn't include the houses that didn't sell.
Right. Everything that's on the market, right?
Those are the houses that did sell.
Okay.
There's plenty of houses that have been on the market for hundreds of days and they don't sell because they're overpriced and then they go away, and that data is not really reflected.
Does that median price point, does that include only sold homes, or is that things on the market as well?
That's sold homes.
Okay, cool.
Yeah, that's
Cool.
how they come to that.
Sure.
Okay. And then for our friends in Kellogg,
Yeah.
Shoshone County, thought this was interesting. Your home prices did go up too.
Yeah. Not quite as much.
Medium home prices, $288,000 now. That used to be the place to get cheap homes.
You bought like a $20,000 home out there.
I bought a few.
You bought a...
Yeah. I bought a lot of homes sub 100 grand in that area over the last decade or so. Harder and harder to find anything
Sure.
in there, but it's house prices are up 2.6%. Now here's what's also way up: days on market. Over 100 days now, up 13.6% from the year before.
Well, and like you said, like these mimic what kind of happens in Coeur d'Alene. It's a smaller market.
Sorry, your days on market went down this year.
Oh, gotcha. Sorry, I missed that. Yeah.
So in 2025,
Went up.
it's taken by a long shot.
Yeah.
Shoshone County, be careful. I mean, I have a house under contract that I'm going to be flipping.
Is that the one I went on like 5 months ago?
Sure.
Keep it rolling. I love it.
But average days on market there, it's up 13.6%, which means taking longer to sell stuff out there.
Yeah, and it's a less desirable market. That's what I was trying to get at. Like
less desirable.
It's not quite a tourist location like Kootenai County, Coeur d'Alene area. This is more like it's not rural out there, but it's definitely older feeling. It feels
it's old.
Yeah, it's old.
It's old.
A lot of miners work out there. It's just a lot of like workers work out there. Basically, Dave Smith.
Yeah, unemployed people work out there too.
They do.
But it's an area where I noticed this when the house prices just started going through the roof a few years ago in this area. Yeah. I actually noticed quite a bit of people, the younger people, just like, I'm just going to go buy a house out in Kellogg.
Yeah.
And they sold what they had here and went out or I say Kellogg, but I mean the whole county,
Shoshone.
Osborne, Kingston, Pinehurst, all that area. That market over the last few years has appreciated more than any other county in northern Idaho.
Interesting. Okay.
Yeah. Huge appreciation when you look at the percentage of appreciation.
Okay.
So that was the Bitcoin in real estate
Right.
was Shoshone County.
Okay.
And it's still might have more to go. Anyway, makes me just think about, should people just give up on home ownership?
There's a valid point to be said there. Like, I don't think people should give up on home ownership. I think there's a lot of upside for home ownership as well. You get the tax deductions, like everything. If you can buy a home, you should be buying a house.
Right.
But if it's like something that's going to really stress you out and like take you down with it, just rent.
Yeah. I would add a caveat to that. If you can buy a home and you plan on staying
Right.
for more than a few years, you should probably definitely consider buying a house.
Yeah, absolutely.
If you're not really sure you're even going to stay in North Idaho,
Mhm.
I would throw out a little caution there.
Yeah.
Because our market's not guaranteed to go up. And if you did buy a house and you held it for 1 year and you decided to resell it a year later,
Yeah.
even if we did have appreciation, even if it went up 4.2% again, there's still selling costs. And the selling cost is kind of massive. You're going to pay brokers somewhere between 5 to 6%.
Mhm.
You're going to pay title companies around 1%,
right,
for all the fees. You're also going to pay the buyer probably an incentive to buy the home to help with their lending costs that I've seen on average $10,000 extra.
Yeah.
So there's a chance if you buy a home in this area and you hold on to it for a year and you decide you're going to move out of state and you're going to sell it, even if it went up in value, you're probably going to lose money.
Yeah.
So be careful.
I've actually seen that a lot this year.
Yeah.
I mean, I talk to a lot of real estate agents when I'm doing their real estate photography, or I talk to the clients who live there, like, hey, how long you lived here? I'm just trying to make small talk.
Yeah.
Oh, we bought it in, early or mid 2023 and we're selling it now. And I'm like,
yeah,
hopefully make money. I don't know. Some people just have to
hopefully
move.
Hopefully you get to walk away without having to cut a check at the closing table.
Yeah.
Which a lot of people, it depends on the price point.
Right.
If you bought a $900,000 home in 2022, you're cutting a check at the table today. If you bought a $400,000 home in 2022, you're walking away with money.
You might make a little bit, yeah.
So it depends on the price points.
Yeah.
And, the neighborhood, all that stuff.
Sure.
Is important. In general, the starter homes in the last few years, they've just been going up in value every year.
Yeah, that's true.
The secondary homes, the larger properties, they have been coming down.
Yeah.
In general, since 2022,
Mhm.
but they went up so much.
Yeah.
From like 2018 or so to 2020 to 2021, or it depends on how long you owned it. But
yeah. And I love what you do. Like, obviously, when you do your meetups, you talk about the market happenings and what's happening in the market. It's all data that you can use. You use it specifically when you're flipping, right? So you try to stay within that median price point because that's where houses are normally selling.
I try as much as I can.
I know you try, like, most of the times, like, looking back on all your flips, you've gone above, you've gone below, of course.
Yep.
But, like, you try to stay in, like, okay, this house will be worth $550 by the time I'm done.
Yeah.
What can I buy and how can I get there?
Yep.
Right.
So the house that I'm buying right now in Post Falls, the resale value is actually around $230,000.
Okay.
Or, sorry, $530,000.
I'm like, are you buying a trailer?
And from what I've seen, there's a healthy amount of activity.
Okay.
For it, and it also has features that are pretty popular. Third car garage, full basement, corner lot, close to the state line is actually kind of preferred by people that like work in Washington,
Right.
want to live in Idaho. So I feel pretty optimistic about the resale potential on this house. The one in Kellogg, a little bit more nervous about, but I still feel like we got a great margin because like we just showed here, medium price point in Kellogg or that county.
Yep.
It's gone. Where'd it go? Here it is.
Mm-hmm.
Is medium. I'm above the medium. So the house that we're going to be reselling, it's a 4-bedroom, 2-bath, 2-car garage.
Right.
And it's going to be around $375,000. So about $100,000 over the medium, which is a little nerve-wracking just because I know it's going to probably take just a little bit longer to sell because you're out of that range where everybody wants to be in.
Right.
Most homes that sell in Kellogg and stuff, they may just have like no garage or 1-car garage.
Yeah.
They usually have 1 bathroom.
Yep.
Not 2. So it does have a couple of nice perks. It's in a good area. It's got a 2-car garage, 2 bathrooms, and 4 bedrooms, good space. So I feel like it has enough perks to.
Has any progress happened on that one?
Yeah.
Really? Okay.
Yeah, it might actually close. I spoke to the seller's lender. The seller, for those that don't know, has not been showing up to closing. He's getting foreclosed on.
Okay.
But he's also buying a property up north and trying to buy a property up there since summertime.
Yeah.
I finally actually talked to his lender a few days ago.
Okay.
And they're just waiting on a foundation inspection report on this manufactured home that he's buying.
Okay.
And then they should be able to close within a week or 2.
Cool.
So that's like, oh, wow, we're actually hearing it from somebody other than this seller who doesn't show up to closing and reaches out every other week via text once, doesn't respond to anything else, and says, yeah, we should be almost there. You just can't believe him.
So do you have a hard money loan on that one already?
Lined up.
Lined up.
Yeah.
Okay, gotcha.
Yep.
The only cost you've had has been my loan?
No, actually, I did have costs the first time that we were going to close on it.
Yeah.
So we had to get new lenders because they had their money out at the title company for like a month.
Okay.
So I actually paid them interest, and then they took their money back.
Yeah.
And I said, and so the main broker, hard money broker I was using, he's just kind of just waiting.
Right.
They're not going to, now we have new investors for that loan.
Gotcha.
But they're not wiring their money until we've got the green light from
clear to close type of thing.
Clear to close on the seller's
Got it.
property that he's buying.
Okay.
Yeah.
Cool.
So yeah, complex, but
it's never the tasks that you do and the jobs you do in this real estate market are never like, you're not buying a house on market for the most part and just like clean paperwork and working with like
you're always
wholesalers, and
problems.
there's always problems with distressed properties. So
yeah, so if for the novice flipper out there, or somebody who wants to flip, just know that the majority of the great deals that you'll find, they come with a lot of baggage.
Yeah.
You
got to be able to reel in the fish and have a little bit of patience.
Yeah, just totally accept that. Be fine with it.
Yeah.
That's just part of the process. It doesn't bother me much. It kind of bothered me when I had to kind of pay interest.
Sure.
And should I stay in this deal or not? But it's all fine.
Yeah.
We're getting a good deal.
That's awesome. Very good. And then you're one in Post Falls. You're when you're closing on that one?
At the end of this month.
Cool.
So 2.5 weeks or so. Yeah.
Congratulations.
Thanks.
Yeah.
Pretty excited about that one.
Yeah. Good.
That one should be a good one.
Yeah.
Yeah.
Right.
Thanks.
You're welcome.
What are you working on?
Just the same thing. Funding my accounts, putting gas in the tank.
Putting gas in the tank.
Yeah.
Of the Prius.
In the Prius, yeah. No,
that's not much gas. Hey, how are you liking these gas prices lately?
They're all right. I don't really feel it. Like
you don't notice it.
I have an 8-gallon tank on my Prius.
Right.
So like maximum on a $4 a gallon.
I've been driving my truck lately.
If I was empty.
So Hillary's Kia. You would think a Kia little SUV would do great on gas.
I guess like 25.
Not at all.
No,
that thing sucks.
Really?
She gets like, I don't know, in the teens, I think.
Gross. She's driving like a maniac?
I think so.
Okay.
I did see her. We both went to separate gyms today, and I saw her turn on Hanley on 95, and she just guns it. And I'm like, that's where all the gas is going. And then I drive my truck a lot more lately in the winter.
Yeah.
And my truck just, I think I get 11 to 12 miles a gallon. So it's kind of nice to see that gas prices are like in the low $2.
Yeah.
It's like, it's kind of nice.
It will go back up.
What?
It's like when people say like, oh, the president caused the gas prices.
Can't I just enjoy it for now, Jeremy? Why do you have to ruin it?
April's going to come around and tourist season's going to come back, and it's
just a cycle.
It is a cycle.
Sure. It's nice for now.
Yeah, no, you take it when it's here for sure.
Yeah. Because I don't usually buy much gas having a Tesla. But
yeah. Are you still getting a Tesla truck?
Oh, no time soon.
No time soon.
I still have my reservation out there.
Okay.
But I want to run my Toyota Tundra into the ground before I get a Cybertruck. So this could be probably another 10 years out or something like that. I really actually like the Tundra.
Yeah.
And
they're good trucks.
I'll just, I have such a low interest rate. It's like 2%.
Nice.
In the twos, sorry, not 2% even, but I pay such little interest.
Yeah.
On it. And it has the truck has no issues ever.
Awesome.
It works really well.
Got enough cup holders for you?
It has 14 cup holders.
Wow.
I counted them.
Ample enough. Your earlier truck had one, and it was really bothering me.
The
Dakota?
The Dakota.
Yeah.
The Dodge Dakota.
Yeah.
Cute little truck.
Yeah, great little tiny truck.
Cute little truck. I love the lumber rack.
Uh-huh.
But gosh, the cup space was inadequate.
Yes. It was bad.
It was very
You
bad.
and I were driving in a truck. I'm like, I guess I'll hold my coffee.
Yeah, one of us has to hold our cup. Don't bring extras.
Don't bring extras. I have 2 cups.
Unless you want them in the back seat rolling around.
I've got a water and a coffee with me all the time.
I always have multiple cups.
Yeah.
Or water bottles.
Yeah.
Whatever you want to call it.
Okay. So no plans for a Cybertruck right away?
It's something I'll be excited about one day in the future. I feel like I will have one day, but no rush.
Okay.
I already have a Tesla, and I feel like it would just be another of the same vehicle, just a little bit bigger.
Yeah.
And the advantage of having the Cybertruck would be that I would only need one vehicle.
Right.
And I would not need another truck or a car.
Yeah.
So that'd be one cool thing, but it just financially doesn't make sense for me right now.
I think if you sold your Tundra and you sold your Tesla, you would miss having a truck, like an actual truck with an actual bed.
Well, it would have a bed.
It would have a bed. It's not the same as like a Tundra bed.
Why not?
Is it not as big?
Yeah, it's like the same size.
Is it? Oh, it seems like it'd be much smaller based off the size of the vehicle.
No, the Tundra bed's actually not that big because I have a large cab.
Gotcha. Okay. So you still have space to carry stuff if you needed.
Sure. Yeah, it would have no difference.
Yeah.
That I'm aware of.
I have no plans to get one.
I think I would have. There's more utility in the Cybertruck.
Sure.
in my eyes, just because it has like the onboard compressor and that kind of cool stuff.
Yeah.
And you can plug in more tools to it.
Dude, when you did the self-driving with me, that was so fun.
Yeah, I'll get that back someday.
What a time to be alive. No, like I would still buy a Cybertruck. It's just not like on my list. Like my goal is to buy one. Like
it's on my
I would buy one. Absolutely.
It's on my life bucket list, but I'm in no hurry for it.
Yeah. Plus, you don't get any eco credits really right now. I think they put a caboose on that.
Yeah, that's done.
Yeah. That sucks.
I'm not worried about it. I get plenty of write-offs being because it would just be more write-offs.
Right.
Like it really wouldn't affect me.
Right.
Because it's not like you just get it off the price.
Right.
You just get a tax credit.
Yeah.
And I already get, all the cool tax credits. Well, losing so much money a few years ago, that has a lot of rollover.
Yeah, you can carry over rollovers. I love it.
It's like, what was that wireless company that had the rollover minutes?
Oh, AT&T.
Singular? Was it Singular?
AT&T had them.
AT&T had them too? I thought it was the Orange Company. You remember the Orange Company?
Was that AT&T?
No, it was like Singular or something. Started with a C, I think, or
AT&T had rollover too, because you were in my faves, and we could talk to each other.
My faves was T-Mobile.
Okay, you're right.
You're getting them all mixed up. Have you had your Adderall today?
I don't even know. Yes, I have.
I need some.
Yeah. So what else is new with you? You got Post Falls House. You got Wallace House. What else are you working on? Anything cool?
Kellogg House.
Kellogg House. Sorry.
Well, no, it's okay. We have. I set out my goals for the year. I mean, I'm still working on the cabin, but it's on pause. Still working on that development. I think we're now on the calendar for P&Z. It got pushed back a month for March. Okay. We were supposed to be in February, but by the time this podcast comes out, we'll probably be close to P&Z. And then we'll actually start work on the subdivision in like April or May.
P&Z is something in zoning?
Yeah, Planning and Zoning Commission.
Yeah.
Yeah, it's like the final meeting to approve your subdivision.
Cool.
We've been approved to be annexed into the city. Now just our subdivision plans. They've been looked over by all the departments and okayed, but now it just has to go through the actual city official stamp, and commission approves it.
You're getting a subdivision out there?
Yeah. We talked about this, right?
Yeah, we did.
Okay.
This is not your St. Mary's house, right?
Rosewater Place.
Yeah. Not your St. Mary's one.
No, this is in Post Falls that I'm doing with Joe, the 25 house lot.
I am spacious today. I apologize.
This is the one we're making $1 million on.
That's the $1 million one. Okay, so that's why you need zoning checks.
Yeah, we did. It was fun. We got to come up with the street names and the subdivision.
Nice.
And so we kind of themed it off Titanic.
Ooh, it's like Rose.
So it's Rosewater Place, and then we've got Hockley Court, and Dawson Court.
I love it.
The two guys. And Rosewater Place is the subdivision.
Gossip Lane.
Gossip Lane. Well, we ran out. We only could
get more streets.
We could only name the two streets that we had and then the subdivision.
Can I bum a smoke drive?
But it won't be very apparent unless someone's like a mega Titanic fan.
Yeah.
And then they might be like, Rosewater Place, Hockley, Dawson. What? These are all names from Titanic.
Rosewater Place, your subtag, your heart will go on.
I don't think we have a subtag.
You can.
It's too late.
Oh.
We've already submitted our application to the city.
Well, it's like a DBA. You can just put Rosewater Place and then and then
change it later.
Yeah.
Well, it's not an entity.
It doesn't have to be. McDonald's says good under it. It doesn't say good under it.
All right, we'll change it, Jeremy.
I want more Titanic references.
We'll pay the addendum.
Yeah.
To say my heart will go on.
You're going to make $1 million? Titanic this place out, buddy.
We're just going to theme it with dead bodies and ships.
Every house comes with not enough life jackets.
Every house has a lifeboat.
Yeah. Women insured first.
No, we're not doing any vertical work.
What's funny is with Quinn, we always yell at each other for fun. And I always go, is anyone alive out there? Can anybody hear me?
Really?
And she goes, can anybody hear me?
Can anyone hear me? Has she seen Titanic
Not yet, but we quote those parts quite often.
Nice. Right on.
Yeah.
Well, pretty good show.
Hey, yeah. Just a market update for this time.
Yeah, just a quick market update. Just quick. Hope your guys' March is going to go well. I hope you're enjoying March Madness out there. For those that are getting into the picks of the college games, they put teams together in spreadsheets, right? Have you ever done this?
Yes.
March Madness is where it's college basketball, and people they get all mad about it.
That's why it's called March Madness.
They got all mad and angry about their picks.
Yeah. I like to see how quickly I can fuck up a bracket.
Have you actually done a bracket?
Yeah. I've done a couple.
I'm going to have AI just do mine. And I've put it out there and I'm not going to pay any fees.
No. There's lots of groups you can just do free. You can do You don't have to pay anything. You can just do your own bracket.
You doing any betting online?
Sorry.
No, it's okay.
Do you want me to?
I'm just curious if you're getting into that.
Oh, no.
Robinhood has a futures market.
Tell me more.
You can just bet on anything.
Oh yeah, I get all the notifications like,
Yeah.
do you want to bet on this basketball game? I'm like, not really.
Do you want to just bet on who gets assassinated next? You want to bet on which city gets burned down next?
Not really.
Yeah, that's all we got.
It's okay. Well, yeah. Thanks for checking this out. We'll see you next week at the Investor Shed podcast.
We'll see you next week, everybody.
Yeah.
Or you can just stop listening. Bye.
Don't listen to him.
Thank you so much for checking out the Investor Shed podcast. If you enjoyed your time, make sure to leave a 5-star rating and review on Apple Podcasts and Spotify. Follow along on YouTube, TikTok, and Instagram at The Investor Shed for shorts and promos about each episode. Do you want to be a guest or know someone who has great real estate investing advice and stories? Reach out to us at theinvestorshed@gmail.com.